Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that you can use in order to pass your funded account challenges and become a consistently profitable trader in 2025. So in this video, I'm going to give you the full step-by-step instructions on how you're going to find and execute these trades, along with a few trade examples so that you can really understand how to trade this strategy. So I'm going to need you to watch this video all the way to the end so that you can really understand and grasp the concept. So if you've seen my previous videos where I talk about the Judo swing trading strategy, this strategy is kind of similar, but instead of trading the Judo swing on the Asia session range, we're actually going to be trading it on the London range. So first, let's start off by identifying exactly how and when we're going to be using this strategy. So first and foremost, I like to trade the strategy on Euro USD and GBP USD. However, I would highly recommend that you go ahead and back test these for yourself, because there can be other pairs that I may not have tested myself, which may work better or worse. So Euro USD and GBP USD are the two pairs we're going to trade this strategy on. We're then going to be utilizing the 5-minute time frame in order for us to execute and get into positions. We're going to be doing a top-down analysis to understand where we are in terms of structure. And the most important part of this trading strategy is the timing of the London session range. Now, I know I do things a little bit different. My Asia session range was from midnight to 7 a.m. A lot of different people were saying that they have it until 8 a.m. and whatnot. However, I like to do things based off of my back testing. And what I found is that the London session range that works best for this strategy is starting at 8 a.m. UK time and ending at 1 p.m. in the afternoon UK time. So 8 a.m. until 1 p.m. UK time. So whatever time zone you're in, you will need to configure this to wherever you are in the world. So now that we've got the basics and we understand how, when, and where we're going to trade the strategy, let's actually go ahead and find out exactly what we're going to be doing. Now, with the Judo swing, we were highlighting the Asia session range. So for this strategy, we're going to be highlighting the London session range. So let's come over to our indicator, and we're actually going to turn off the Asia session range just so we can only see the London session and we're not confused. Now, for this strategy, you can use the indicator like I do, which is the Asia session range by Rob Minty. However, I would highly recommend that you mark this up yourself, because the indicator can be wrong and you really need to understand where the time zones are, where the highest point and the lowest point is for yourself before you rely on an indicator. The indicator should make your life easier, not harder. So what we're going to be doing is identifying the Asia session range starting at 8 a.m. UK time and ending at 1 p.m. UK time. So now that we've got this Asia range, what we're going to do is highlight the highest point within this range, and we're going to highlight the lowest point within this range. So we've got our high and we've got our low. After that, we're going to come up to the higher time frames, and what we're going to be doing is understanding where we are in terms of our higher time frame bias. So as we can see at the moment, price is pretty bearish. We were previously bullish, putting in higher lows and higher highs. However, most recent price action has given us a break below the most recent higher low, indicating that this is now a brand new lower low. Therefore, we understand that our higher time frame bias is bearish, and when we come down to the lower time frames, we hope that this trend is going to continue. However, as we drop down the time frames, what we can start to notice is that the short-term bias has now changed. On the 30-minute, we put in this lower low, lower high, lower low, and then we put in this higher high, indicating that price has flipped from bearish to now bullish, putting in a higher high. So now our next anticipation based off of order flow is that we get a higher low and then a continuation higher. Now, if any of these concepts are stuff that you struggle with or is something that you don't fully understand, then I would highly recommend going down in the description and clicking that link to become part of the community, where you get access to my full A to Z trading course. And inside it, I teach all of the concepts you need in order to become a consistently profitable trader. Things such as liquidity, fair value gaps, order blocks, breaker structure, premium versus discount, entry schematics, trading strategies, everything you need in order to become a consistently profitable trader. But now that we understand that our short-term bias is now actually bullish, what we can start to do is look for draws on liquidity. Now, what can we see in this range of price right here? We've got our Asia high and we've got our Asia low. Now, we know that price is going to target the high or the low of this Asia range, but is there anything else that price can also target? Well, if we take a look just a little bit to the left, we can see that we've got all of this liquidity that is sat just below the Asia lows. Now, taking a look at this liquidity, that seems very juicy for price to target, because as we can see, it kind of looks like it's a triple bottom. So now underneath this low, there's going to be a bunch of orders, whether that be stop losses, buy limit, sell stops, you name it, there's going to be a bunch of orders right below. And on top of that, if we continue to look to the left, we can see that we've also got this massive inefficiency sitting on the left hand side here as well. So we've got liquidity, inefficiency, and we've got the Asia lows, which is lining up with the short-term bias that price is actually bullish. So what we want to see is we want to see price come down and sweep the London lows, and then we want to see price target the London high. So that is now our anticipation. We've understood where the higher time frame is, we've understood where the lower time frame is, we've identified draws on liquidity, we've identified inefficiencies. So now we've come to a conclusion that if we get a sweep of the lows of the London session, then we can safely look for a buying position. So if I now continue to play price on, what happens? New York session kicks in and price immediately goes for that liquidity. It sweeps all of that liquidity, and now we can start to look to enter into a trade. Well, at the moment, we have to wait for a market structure shift because that's going to indicate to us that price has gone from bearish to bullish. So we've put in this lower low, we've put in this lower high, and now we've put in this lower low. Therefore, in order for us to get a market structure shift, we need to break and close above this lower high right here. And then once price puts in a higher high, that is the indication to us that price is now looking to go higher. So based off of that information, what we can now start to do is to identify key areas of interest that price can potentially retrace back into. And this is where the understanding of expectation order flow comes into hand, because we know that after a higher high has been placed, we expect a higher low and then a continuation higher, right? So based off of that information, what we're going to do is identify the inefficiency which caused that market structure shift. So due to this fair value gap right here, this is where all of the impulsive move came into this leg, which gave us that market structure shift. So it's highly likely that price is going to be magnetized to this area because this is where the volume came from. So now we can take our entry at the open of that fair value gap. We can put our stop loss just below the most prominent low. And then what we can do is target the opposing liquidity, which in this case is going to be the London highs. So very similar to the Judas swing. However, instead of the Asia range, we are utilizing the London range and finding external targets for price to be reaching to, external forms of liquidity that price can go to, and that is simply that. So once we've done all of this and we've identified our entry, our stop loss, and our take profit, we're simply now going to wait for price to come back, tap us into this trade, and as we can see, zero drawdown. We get tapped in and then price immediately looks to run away. And where does it target? It wants to target the London highs. Now it plays around for a while, but eventually it does go ahead and take us to the TP. So it was a little bit of a wait. We had to go through the Asia session range. We were holding overnight. However, we did in fact get all the way to our take profit. Now that is a 1 to 2.2 risk to reward, which means for every $1,000 that you risked, you would have made back $2,200. So let's recap exactly what we've gone over today. First and foremost, we're going to identify the highest point and the lowest point that price has been within the London session. So now again, for me, the London session starts right here at 8 a.m. UK time and ends right here at 1 p.m. UK time. So the highest point and the lowest point within the London range we identify, and then we go to the higher time frames and we identify where we are in terms of our structure. Are we bullish? Are we bearish? What are we expecting? Draws of liquidity, inefficiencies, and we identify all of this on the chart. Once we've done that and we've got a generic bias for the overall trend move for what we're looking for, we can then wait for price to come and sweep that side of liquidity. Now, if price had come up and swept the London highs, then I wouldn't have actually taken this trade. Now that would be because it would have gone against my bias, it would have gone against everything that I understood on the higher time frames, and that would mean that I would be chasing a trade instead of letting a trade come to me. So now I waited for price to come and give me that sweep of the lows because that is what I was anticipating, and then I was safely able to take this trade. And then once we get a sweep, we then identify our structure and we wait for a market structure shift on the 5-minute time frame. And then once we've done that and we've got our market structure shift, we identify the inefficiency which gave us that market structure shift. And once we've done all of that, we can then safely enter the trade, put our stops below the most prominent low, target the opposing liquidity, which in this case was the London high, and that is simply it. It is nice and simple. All you have to do is understand your higher time frame bias, understand inefficiencies, order blocks, all of those things. And again, if you do struggle with any of these concepts, then click that link down in the description. But that's going to pretty much wrap it up for this video. Hope you guys enjoyed and got some great value. If you did, don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.